With world-class expertise and local insight, Dexus creates value not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli on what a dramatic day, Tariff Tantrum Thursday, if you like. Look, we're certainly closing at levels much better than where we opened, but let's have a look at the market action. So we fell by around 2% right on the open. A little bit of buying coming back in towards the latter part of the trade, halving those losses there on the CBO 200 to around 1%. The ASX 200 has finished the session off by around 0.9% as well, crossing below its 20-day moving average as, of course, we react to the tariff implications. Economists now saying that the Trump tariffs could force the RBA to cut rates up to 4 times this year, so that would be another 3 from where we are. And just getting, of course, to the overall themes of the day, we're calling it Tariff Tantrum Thursday, as we continue to see reaction from the likes of Treasury Wine Estates, Ansell, Fisher and Paykel, Cochlear. James Hardie has actually been one stock that has been performing well. So looking very closely at all these companies that do have exposure. We talked about the beef impact as well. ANZ saying beef farmers could actually avoid the worst of the tariff impact because the tariffs, are not as strong as many had expected. Had a great conversation with David Buckland from Montgomery Investment Management, who essentially said the same. And look, the US needs high-grade beef, he says. Asset whiplash is what we are facing, though, as we continue to see reaction not only in stocks but in bonds, in the currency market. The Aussie had a big tumble earlier in the session, stabilising somewhat in the latter part as well. And of course, we're looking ahead to what is going to happen in the offshore market. It does look like EU markets will drop quite significantly as we react to the Trump announcement. US futures contracts also pointing to heavy selling. Bit more punitive measures on China. There was an extra 34%, 20% on the EU and 24% on Japan. And I had up there as well rate expectations, because we are now factoring in what this means for the RBA and, of course, the likelihood that if we do see a global recession and a downturn, then that will lead to more rate cuts from the RBA. The likelihood now of a cut in May, so next month, is something like 95% compared to 70% where it was yesterday. Let's have a look at the sector movements in terms of what we've seen. Gold was a really, really bright spot, but we'll look at some of the laggards. Iron ore here weaker, Fortescue down by 3%, BHP Rio as well, all of these China exposed stocks, if you will. Consumer staples was a bright spot. We do have to eat. We noticed very early on that Woolies and Coles were holding up quite well, as was Endeavour Group. I guess we have to drink as well. Endeavour up by around 0.9%. Tech stocks, of course, we saw big falls coming through in NASDAQ futures. Zip was one of the worst performers, down 7% today. Well, it was all about the implication of the tariffs, and Treasury Wine Estates says it doesn't expect the measures to materially impact its business. Fisher and Paykel, meanwhile, rose, saying costs are likely to increase in full year 26 due to extended tariffs, which represent around 43% of the first half of this financial year in terms of revenue. Cochlear, look, it's still awaiting clarity, as so many we've spoken to today are also doing. Cettire hit quite hardly. It says several luxury brands have indicated they'd seek to increase the pricing of their luxury goods. And we also had ANZ confirm that APRA is conducting an investigation into non-financial risk practices and culture at the bank. Let's have a look at the gold stocks now, because that is where we have been hiding as the price of the precious metal hit yet another record high. Regis, De Grey, Northern Star and Newmont all looking very solid. Let's welcome to the COB Mathan Somasundaram from Deep Data Analytics. Mathan, you've climbed out from under the covers. Your take on Tariff Tantrum Thursday?
Yeah, I am actually shocked that everyone else is shocked. I mean, it was pretty much flagged. I think it's amazing how we can hope on certain things. So in theory, like a lot of the market was hoping that in the last minute, Trump was going to backtrack. But it just, for me, I think it comes down to where we are in the cycle, and they kind of gone through the process of what they have to get to pass the tax cut. That's been the main thematic. And for that, we needed to get rate cuts. For that, we need to have weak economy. And that means market trading at all-time high was always under threat. But it is still amazing. I mean, it's almost like reality TV. You have to laugh. I mean, it's doing, billions of dollars of damage, but you have to laugh. I mean, nobody comes up with tax policy for 185 countries in one go. And especially when the calculation is almost primary school level. And you just know that they're not planning on any logical argument, because just imagine trying to negotiate with 185 countries to get some kind of a trade agreement. I mean, the average one takes 6 months to a year. So imagine 185 countries. It's just insane. But, this is the world we live in. So we have to ride it. And I go back to what one of the great comments from Warren Buffett. He said, the Noah rule, where he says, everyone knows to predict the rain, but if you don't build the ark, it doesn't matter. So we knew this was coming. Pretty much most of the market didn't do anything about it. So if you didn't have risk management, you're being shocked into it.
Yeah, we weren't building our arcs potentially enough or strongly enough. I'm kind of with you. I think this was widely priced in, but maybe that's a good sign that we dropped 2% on the open. We've closed only down by 1%. Let's talk about some of the actual stock specifics and some of those companies that were hit, Mathan, like Breville, like Ansell.
Yeah, these are I guess when you have a global economy that's built around most efficient manufacturing cycle. So you've got a global manufacturing, you've got pieces being made all around the world, and then you're moving it in. I mean, you have to remember, this was this global system that was built by the US corporates. So a lot of companies use this kind of a structure to get the most efficient production channel. So if that's the case, and suddenly you've got taxes hitting it at different levels, well, obviously it becomes inefficient. And this is going to, I don't know what the quick solution is, because the reality is Trump's going to be around for 4 years. Who comes after him might change the policy. Anyone who's going to change its supply chain will need to have, at least 10 years of some consistency to make that change. So I don't think anybody's going to change their supply chains, irrespective of what the policy is. And so there's going to be a lot of volatility, and there might be changes to the policy over the next number of weeks or months, and it'll remain volatile. So I think it's going to be really tough, especially for manufacturers when you've got supply chains around the world.
So what do you do then? Do you keep your powder dry? Do you look, gold is pretty much, it seems to be where everyone is, but is that an overcrowded trade, or how are you sort of looking at it, Mathan?
Oh, we've been in gold for a number of years. So we saw this coming, and we've been there. It's been our substantial weight in our sector holdings by a country mile, and we're happy to sit there. We don't have a target. Our view is it's the hedge, the only hedge in policy madness, and we have policy madness at the extreme level. So I don't think we're going to suddenly solve the problem. I think things will get worse, and for me, that's positive for gold. So I suspect gold is going to go higher. Aussie dollar is generally a proxy for global growth. So Aussie gold miners, we're going to see rising gold price in Aussie dollar terms. We're already past 5,000. 6,000 is not that far off, because as gold runs up and Aussie dollar comes down, you're going to have that. And if we're going to start talking about RBA cutting rates in a rising inflationary environment in the US, well, then Aussie dollar risk is even lower. So we're positive on Aussie gold miners. We're happy to sit there and ride it for even longer.
When you look at the fact that the Nikkei fell around 3% today, and it looks like EU markets will tank, do you think we kind of held up okay then?
Yeah, our market is quite interesting. We have the similar dynamics to the US, where you can buy a handful of stocks and you can actually move our market. We don't have that concentration in most other markets. In US, you can buy 67 tech stocks. In theory, that's about 35% of the US market. That's actually about 20% of the global market. That's how big they are. In Australia, it's the banks and the miners. So you can buy 3 miners, 4 banks, and you can have about 25% of the index. So today, when the market fell, CBA from the bottom to the top ran up $5. So global investors who are holding substantial amount of equity holding because they've sold out of fixed income and had an overweight in equities, they defended the market all day today by buying CBA. They bought some miners, but at the end of the day, they started dumping the miners as well. But they held on to the banks. Now, the banks kind of play well, but they're extremely expensive. So there'll be a time as the economy slows down, they will have to get out of the banks. But today, I think our market not falling as well, it's masking the underlying problem. If you remove CBA, we're probably down 1.5%.
All right, remove CBA. Let's not do that though. Mathan, we'll leave it there. Thank you so much, and good you've been hiding out in gold. Mathan Somasundaram there from Deep Data Analytics. Well, one of the stocks he was talking about was the stock of the day, that was Breville. And Andrew was joined by Howard Coleman from Team Invest and Grady Wolf from Bell Direct.
It had got very pricey, but although they're moving most of their production out of China, much of where they're moving it to has also had big tariffs slapped on it, because one of the places they'd moved a lot of their production to is Vietnam. So it also got a whole lot of extra tariffs added on it. But in the end, it'll be the American consumer who'll either decide not to buy a new coffee machine, or alternatively, they'll pay more for a coffee machine. So, you know, if you beat your own citizens over the head enough, they either won't buy things, or they'll pay more for things they buy.
Yeah, double hold. A hold for me as well. We don't cover it, but looking at the company itself, it's an exceptionally run company. They've got massive market share in Australia. They have a very well-known brand and brand name, not only in Australia but globally now. So massive US market there that accounted for a lot of their record earnings in the first half that we saw posted by Breville. But what we're looking at is obviously they're going to have to pass the cost on, as I mentioned earlier. Any company that doesn't pass the cost on is going to get seriously hurt on an earnings front, but also on a cost front, and also from investors selling out.
Okay, let's have a quick look at the leaders on a down day. Of course, it was gold where most were hiding out today, and James Hardie as well had a solid session, rising by 3.2%. To the downside, plenty of those. Ansell, of course, we touched on the impact there with its manufacturing and exposure to the US. Liontown Resources down 12%. Net Wealth was off by 9.5%. Mineral Resources and Capstone Copper also under pressure. In the small end of town, AMA had a good session, but you know, we often see really big gains in the small end of town, and the top one's not even at 10%, so that sort of tells you the overall risk mood today. In terms of the laggards in the small end of town today, Cettire, it did touch on the fact that its prices may have to be hiked due to the supply chain issues and tariff implications. And some of the other fallers include Titan Minerals, down 9.4%. Well, the big one is going to be seeing how US and European markets react to the announcement. But in terms of data, we've also got the US trade balance, a $110 billion US dollar deficit expected, and the Challenger Job Cuts survey for March, 190,000 job cuts expected, according to that survey. Tomorrow, we've got household spending from CBA that could lift about 0.2%, according to Bloomberg and Refinitiv. And we'll continue to follow the fallout from the offshore session. We have finished though on the market, off by around 1%. The ASX 200 closing down at 7,860 points, so down by 0.9%. So investors certainly scrambling for the safety, as we know, of bonds, gold, the yen today, but encouragingly, the market was not as heavily sold off as it was in the morning. As Mathan put it though, maybe that's thanks to CBA, it rose 1%. He says if you strip that out, it could have been a much worse day for Aussie investors. All right, that does it for the COB and for AusBiz for today. We'll see you from 9:45 a.m. Eastern tomorrow.